We are absolutely in the golden age of innovation. And there is no question, I've never in my lifetime seen so much going on from a tech standpoint across every industry. A lot of these macro trends are they're industry wide. So like AI is not a tech specific catalyst. I mean, that's going to affect every industry.
Welcome, everybody. I'm Mark Peter Davis, managing partner of Interplay. On this podcast, I interview innovators about their strategies, industries, and decisions. This week, I chat with Divya Narendra, co-founder and CEO of SumZero. Now, for those who don't know, SumZero is an investment community where peer-reviewed professional investment research, so serious investment research, is shared amongst its members. Their network of top analysts in the asset management industry is growing rapidly, and they offer a lot of extraordinary insights. So if you are interested in public equities, definitely check it out. In addition to SumZero, Divya also sits on the board of Gemini, one of the leading crypto exchanges. So we go down that crypto rabbit hole for a bit. And before his career, Divya attended Harvard, where he became friends with the Winklevoss twins. So if you've seen the movie The Social Network, Divya is the third co-founder of ConnectU. Divya tells us all about crashing the set of The Social Network when they were filming the movie, actually. Pretty interesting. He's a great sport, and it was a fun conversation. I hope you enjoy. This episode is brought to you by Thunder. Thunder is a platform that is democratizing access to capital. The company believes fundraising should be about who you are and what you've built, not just about who you know. Founders can create a free account and add their company information, and then match with relevant investors. Investors can create free profiles and provide their investment criteria, ensuring that they only receive relevant deal flow. By utilizing a double opt-in matching protocol, Thunder avoids the spam, only connecting investors and entrepreneurs that should be introduced. Visit thunder.vc to create your free account while the company is in beta. Divya, thank you for being here, buddy.
Thanks for having me, Mark.
Awesome. Let's start off. Would you give an overview of SumZero?
Sure. Yeah. So SumZero is an online community, a la LinkedIn or Facebook, but it targets investment professionals. So we have about 20,000 members globally, and these are pretty much exclusively analysts and portfolio managers who work at either mutual funds or hedge funds or other types of asset managers. And they use the site for a couple different reasons. But the core use case is to share research. So before SumZero, if you wanted fundamentally driven investment research, you would typically have gone to Wall Street. So you would have gone to Goldman Sachs or JP Morgan Equity Research or UBS or one of those firms. And the problem with that research, traditional Wall Street research, is that the analysts who produce that research, A, have no skin in the game, and B, they have significant conflicts of interest because most of those firms also have investment banking divisions that prospect, public and private companies for investment banking business, which is typically, fundraising of some sort or another. And so if you want unconflicted research coming from analysts who do have skin in the game, who are also professionals, you have to somehow know somebody at a fund, say a Tiger Global or maybe a Fidelity or a firm like that. But before SumZero, those folks weren't sharing research online. So I set out to create SumZero to give professional investors a venue and incentives to share their inner thoughts on publicly traded companies, online. And over the years, we've grown SumZero to offer a number of ancillary services as well. For example, we'll help analysts on the platform with recruiting. We'll help them with capital raising needs as well. And we've also opened up this research to individual investors like your parents or yourself, folks who are not necessarily working at funds, but just want deeper insights into the markets. They can actually subscribe for access to SumZero. There are 3 different tiers depending upon what your budget is. But anyway, we've started to kind of unleash access to individual investors. But yeah, it's an investment community. You can almost think of us as like, almost a higher octane version of, say, a Reddit or, a Seeking Alpha, something of that sort.
So is a lot of it kind of people posting research they've done, or is it a conversational environment? Are people chatting with each other?
It's research they've done. So the typical piece of research is a few thousand words long, and it's going to contain a pretty deep discussion on valuation, which is to say, not just like what does a company do, but what's it actually worth and why. So that might involve a discounted cash flow analysis. That might involve looking at comparables. That might involve doing a sum of the parts analysis if a business happens to have multiple divisions. It's also going to involve looking at catalysts that will, drive share price, up or down, depending on whether that analyst is long or short the name. But it's all fundamental, and it's meant to be thorough. It's not a tweet per se, right, or just like an off the cuff set of remarks. These are people who are putting a lot of analysis to what they're saying, and they actually they're putting their money where their mouth is. They're often invested in what they're talking about, and their name is associated with these posts, so it's not anonymized. So if you post something on SumZero that's, let's say, lower quality, your own reputation is at risk, and you'll probably get a low rating for that idea.
So Divya, why did the investors share their research? What's the motivation?
Yeah, I'll go through it. So multiple reasons. One is they're talking about names they have a position in already. So if you own a stock, let's say it's Blackstone, you want as many people in the markets to know why you own it and why you think it's undervalued. Because if they agree and they go buy up the shares, the stock might actually go up. Now, with a large cap name like Blackstone, it's hard to move markets, but you can imagine with smaller cap names, if you think back to like GameStop, for example, last year, which where there was a big short squeeze, those names can move more easily if you're able to generate some consensus. But I think the bigger point is, like, if you have insights that people don't have, and you can share those insights, you can actually have a significant impact on a given stock. It might take some time, but that's sort of how it works. And we find that like the best quality content floats to the top somehow. It'll tend to get the most views. It'll tend to get the most rankings. It'll tend to generate the most discussion. And that's what we're trying to do, is like really bring deep dive research and like higher level thoughts to the forefront, and cut through a lot of the noise that you otherwise see and hear if you rely solely on like traditional media.
Are there any perverse incentives in that? I mean, I see some of the big hedge funders on CNBC and other channels all the time pushing their book.
We want people to push their book. That's the whole point of I think sharing your research. Now, the thing is, because our community is sophisticated, people are skeptical by nature. And so the analysts who push their book for the sake of pushing their book, but are making bad arguments, those pieces of research tend to not, A, they don't typically perform that well, but B, they don't get great feedback. And so it's risky reputationally to push your book. And that's why we run a very transparent platform. So your name, your firm name, your entire profile is associated with everything you post. And so if you're going to post something mediocre, it's probably not going to bode well for your reputation. In addition, we screen the ideas before they get published on the platform. So if somebody is posting something that's subpar, where they're missing, significant detail around core components of their thesis, like valuation being one, risks being another, we actually won't let that content display on the platform at all. So it's a much more curated experience when you're on SumZero. You have to apply to even be part of the community if you want to be a contributor. So all our contributors are vetted. But B, once they're accepted into the community, we then vet out any submissions that they post.
And how much content is coming through the site? Is it a couple strategies a day? Like how much research is someone?
It's typically, it could be a few ideas a day, it might be a dozen, but over the course of the year, you'll see 1,000 pieces of research get posted on the platform. That said, it's not a volume play. It's really much more about the quality of the content, not so much the volume. But the key thing is that any one idea, like I think as an analyst or as an investor, if you're, if you can like learn something even once a year, that's actually a pretty big deal, because you might gain conviction on a particular company that you didn't otherwise have. And that could be the basis of your, that could be the basis of a large position that you put on in a given year, or maybe in a given quarter. Most great investors don't have massively diversified portfolios. Like, they typically invest in fairly concentrated positions where they do a lot of homework around a given situation, and they just understand it inside and out. And that's typically what's driving their returns. It's not buying 100 stocks over the course of a year.
Right.
If that was your strategy, you would just index through an ETF and be done with it.
Right. Have you tracked the performance of the research, more or less?
Yeah. We've been doing a lot more quantitative analysis of the returns on the platform. And we've actually recently, you'll find this interesting, we partnered with a couple ex-Millennium guys who are former data scientists from Millennium, which is a very large hedge fund based in New York and Connecticut. They've helped us leverage AI tools to create a model that takes SumZero ideas as an input and layers onto that something like 100 factors. So some of those factors are fundamental in nature, things like free cash flow yield. Some of those factors are momentum based. But the output of this model is basically a subset of the SumZero idea database. And we've created 4 different portfolios. So there's a global basket, there's a tech basket, there's a small and mid cap basket. And all of these models have outperformed the S&P 500 over a 10-year period, which I think is really interesting. And we've even more recently started to invest a small portion of SumZero's own balance sheet into this, this AI-driven model. And we've been talking to more firms, both quantitatively driven and also just kind of traditional fundamental firms, about leveraging some of this modeling to kind of help them screen within the SumZero database, because there are thousands of ideas on the platform. It's hard to figure out, which ones to focus on. But some of these quant screens are one way to do it.
So is there a way to buy into these funds you've created? Are these publicly available at this point?
Not right now. Not right now, but it's on our radar.
Interesting.
We've seen a lot of in the sort of fintech world. There's been a lot of spotlight around robo-advisors and other kinds of like investment vehicle alternatives to hedge funds and mutual funds. And my view on a lot of these models is they are cheaper than going to Goldman Sachs's private wealth management group, for sure. Like, if you were fortunate enough to have the funds to qualify to be a Goldman private banking client, they would take your money and then they would charge you what they call a wrapper fee, which is typically around 1%. Maybe it's less than 1%, but it's a pretty big number. So imagine if you have a portfolio that returns 10% in a given year, Goldman's going to charge you 10% of your returns. And what are they doing with that money? They're typically putting it in, a basket of mutual funds and splitting it between equities and bonds. And that's basically it. They're not picking stocks for you. They're not even making the claim that they're going to outperform the markets.
Right.
And so what I always tell people is look, if you don't want to do your homework, you can always just go buy a Vanguard ETF, pay virtually zero fees, and most likely you will outperform almost every, wealth advisor. And so these robo-advisors, they do the exact same thing, but they do it at a lower fee, but not as low a fee as you could achieve just by buying a Vanguard ETF, right? Or buying a BlackRock ETF. So for me, I was always if you just want to diversify, then all you have to do is buy one ticker, VOO, right? Which is the Vanguard S&P 500 ETF. You could just own that and never own anything else.
You'd do great.
And you'd be fine.
Yeah.
You do fine. Or you could own the BlackRock equivalent, and I think that's just SPY, right? So, but that said, if you want to outperform the markets, then you need a more active strategy. And so one thing that we'd like to do is, allow people to essentially leverage this deep dive hedge fund research without having to pay the fees that are typically associated with investing in a hedge fund, which tend to be pretty high, 2 and 20, 1 and 10, whatever it might be. And that's something that's on our radar. In the meantime, if you're just a stock person, you love equities, or maybe you like crypto, and you just want to know what is the story behind how, Ethereum is valued, or how, how do I think about Google from a valuation standpoint? All of that research is on SumZero, and you can read it, and it's incredibly educational and really insightful. And I've personally availed myself of it because I run the site, but even for my own portfolio, there are a number of situations where I really learned a lot about not only a stock but a given industry through the research on the platform, where it's helped me actually generate longer term returns. Because I'm not a day trader, and I don't think really most people on SumZero do any of that. It really is more of a long term investing community.
Mm-hmm.
And if that's something you care about and you're interested in compounding your wealth over a longer period of time, you need to have a deep understanding of the companies you're investing in, the industries they operate in, what the competitive forces are. And that's exactly the kind of content you learn, what you gain from being on SumZero.
I've come to realize, talking to all the private wealth advisors and the folks on Wall Street, that wealth protection is a commodity. It's a gimmick that they sell against.
It's a total commodity. And a lot of people are too lazy to understand that.
Yeah.
And what they're ultimately paying for is a brand, and they're paying for, US Open tickets every summer, whatever. I mean, if you happen to be of that ilk where you've made a bunch of money,
right,
and you're lucky enough where JP Morgan cares about you from the standpoint of private banking, you just have to understand that you're not gonna beat the markets. Like, you're most likely going to underperform the markets.
Yeah, net of fees almost for sure.
Yeah. So, but you will get a certain degree of service if that's what you want. But I think most people, given the choice, would rather either reduce that fee or really go after a more concentrated portfolio where there's a lot of thought put into the names. It's not just like, oh, let's buy 500 stocks.
Right. Now, you've been focusing on public equities, and the hedge fund world obviously overlays with that. It feels very much as a VC like we are in the golden era of venture. This is our decade. Maybe it's been our decade for a little while.
I think it's been that way ever since I graduated college in 2004.
Okay.
When I was in college, there were nobody was trying to become an entrepreneur. Most kids were just, I want to go into investment banking, or I want to go work at McKinsey,
right.
And that was it.
Same.
Now, ever since I finished college, there's been an explosion of VC funding, because you've had the Facebooks and the FANGs, and all these companies explode, which has had sort of downstream impact on just, I think, people's willingness to fund crazy ideas. You've had a very low rate environment, which has also helped create a lot of, let's say, bolder risk taking on the part of institutional investors out there. And now, no matter how old you are, if you've got an idea, there are multiple VCs willing to have a meeting and see if it makes sense, and potentially invest in your idea. So it's a pretty exciting time. Now it's funny you mentioned we're in the golden age. That's definitely been true, but this is the first time since at least I was 22 that suddenly people are talking about rates going up, which will certainly have an impact on VC. It has an impact on every asset class.
For sure.
So will VCs going forward be as aggressive? Probably not. But if you zoom out, rates are still pretty low. So I think they'd have to go up quite a bit for the venture capital community to just suddenly contract. Plus, most of these VCs have pretty long-term commitments, so it's not like they're as susceptible to short-term rate changes as maybe other asset managers might be.
Yeah, I feel like the major correlation that the venture community experiences with overall market trends is the denominator effect. When the bottom falls out of the market, VCs are suddenly overvalued in the portfolios of large endowments. And so the upstream supply of capital to VCs dwindles. And that usually leads to VCs investing a little more slowly. We're seeing a similar version of it today, but for a different reason. There were so many companies that hadn't IPO'd in the last 10 years, and now all of that is launched into the market. Not all of it's liquid. All the companies are getting marked up in people's portfolios. And a lot of the endowments are now over allocated to venture, not because the other asset classes dipped, but because VC has outperformed. So materially. So it's an interesting moment. There are fewer LPs, or the traditional LPs who can write checks into VC right now. But I think the trend we're seeing is a lot of the other endowments, institutions that weren't on the VC game, didn't have their alternative asset strategy sorted out, are now waking up and realizing, whoa, these are big numbers. We should be.
What I will say is that we are absolutely in the golden age of innovation.
Yeah.
And there is no question. I've never in my lifetime seen so much going on from a tech standpoint across every industry. A lot of these macro trends are they're industry wide. So like AI is not a tech specific catalyst. I mean, that's going to affect every industry.
Yeah. AI is just next gen software. It's everywhere.
Yeah. Like, you think about blockchain tech, like that's a pretty broad swath of, like so many different companies will get affected by that. Obviously the financial community will and is being affected, kind of first, but a lot of these trends are just massive and they're all happening at the same time. And it just seems like every other day, every next day, there's another, I remember when like Mark Zuckerberg did that whole thing on metaverse. Like nobody was talking about metaverse. And then one day everyone was talking about metaverse.
Right.
And now they're talking about it in the context of it potentially being of greater economic capacity as the real economy. So like, if you go through like electrification, the revolution of like the energy infrastructure in the United States, CRISPR technology, blockchain technology, metaverse, it's like there's so many things that are happening all at once that it's virtually impossible to keep track of.
Yeah, and the question is, does it ever slow down, or are we just in the knee of the curve and it's going to continue accelerating?
I think we're in the first inning of most of these trends. Like if you think about blockchain, I've been on the board of Gemini for 10 years. I don't know. It still feels like we're in the top of the first inning.
Yeah.
Because when I think about the industry and you have, 10,000 different blockchain protocols, many of which will go to zero and probably should go to zero. But even the ones that have promise are so early in delivering on that promise that it kind of gets you excited and nervous at the same time. So yeah, I think we're just beginning. Yeah.
But, I don't know. By the way, it's hard to figure out that you're on the board of Gemini. I think I knew that. We had talked about it before, but I couldn't find it anywhere on the web. Is that a secret?
You know what? I haven't touched my LinkedIn profile in like 10 years.
Classic hedge fund guy, right? Like
that's part of it. Yeah. But no, I remember back in the days, like when the guys were talking to me about what they wanted to do with Gemini, I was like, this sounds cool. And
when you say the guys, you mean the Winklevoss twins.
Yeah. Like, and full disclosure, they're our largest investors at SumZero.
Right.
But they were like obviously personally very invested in Bitcoin. At the time they owned, like there was a New York Times article that came out that they owned 1% of all outstanding Bitcoin. I was like, I was pretty skeptical at that time. And through the last couple cycles, they've managed to like weather all of those troughs where, the markets kind of pull the rug out from underneath and you just, you have people selling this stuff at will. And they've self-funded the whole operation, which is like a whole other story. Pretty incredible. But, like even through the last 10 years, if you look at what has happened in terms of DeFi, the NFT marketplace, just a general, I think, institutional acceptance of like the concept of crypto, not so much a specific coin per se, but just the idea that, hey, this is a legitimate asset class that needs to be nurtured. That happened in a really short time. And even now it's, it's a small fraction of the other kind of more established asset classes. So like you think about what's the runway there. It's massive, and so what the winners are going to be is a whole different debate. But anyway, it's just another example of the rate of progress that we're seeing.
You interestingly sit between kind of what's traditionally an old guard mindset, and then in the hedge fund world, old guard finance, and then with Gemini, you're on the frontier. When I go to family office conversations or meet a bunch of hedge fund folks, there are people who have adopted, who have said, "Hey, crypto's a thing. We're going to start playing. We're going to trade this." There's a lot of people who still give you the eye roll. What have you taken away from the SumZero community? Are most people kind of moving in the direction of crypto, or what's happening?
There's definitely, first of all, we're seeing content on the platform covering crypto, which is itself noteworthy.
When did that start? Is that new?
A couple years ago. I mean, I first posted about Ethereum in 2018, I think it was. And then the twins actually posted about Bitcoin a year or two ago on the platform. But there have been other guys. There have been a couple of folks who've written about Solana. There have been pieces on basic attention token. There was a guy who wrote a piece on the DeFi Pulse Index, if you wanted sort of a diversified play into DeFi. So people have talked about it. I think what I'm sort of seeing as the inflection point is more like developing real use cases out of this stuff for like real people, right, and moving away from just like, this is an asset class for pure speculation. I think when people roll their eyes about crypto, I mean, they're rolling their eyes about the general idea that someone could create a token out of thin air that doesn't actually solve any real problem or doesn't really do anything for anyone, but serves as a pure speculative tool. And for VCs like yourself, you're used to kind of investing in things that do stuff and solve problems. So I think even within the VC community, there's a lot of skepticism about crypto because a lot of this stuff is like a white paper and a promise, but zero execution or like very little execution.
We're betting on future utility.
You're betting on future utility, but like it's hard because a lot of this stuff requires a certain degree of network effects. And so, for example, like the promise of a decentralized world requires a lot of things to happen, right? It's not just having this protocol, but it's having like people build on top of it and people using, building apps on top of it. So when I remember when I wrote about Ethereum in 2017, 2018, this was like right before the first crypto winter. And my entire thesis was on, hey, like this is not just a token. Like this isn't just like a virtual toy that you just trade around with your friends, but like this is like an online, this is an operating system. It's a foundation for a future that could be boundless in terms of what people might do on it. But at the time, there was no DeFi, right? There was no use case. And it was literally just this promise. Now, luckily for Ethereum, after it crashed 90%, somebody came up, with like the idea of lending in a decentralized manner. And so things like Aave picked up, and some of these, ERC20 tokens that support lending kind of sprouted up. And then people were like, oh, whoa, wait a second. This is massively disruptive to the like traditional banking sector. Right. What's that actually worth? Well, let's try to figure out, like how how do you value the banking system? Well, there are a bunch of publicly traded companies in the space. What are their market caps? Let's add them up. What are the frictions that can be kind of removed out of the system? So anyway, it became much, much more tangible. And then of course it, 50x'd from there,
Right. Then we had to run.
I think that's what people roll their eyes. They don't see the use case. And I think Bitcoin to this day, like has that problem where because it's marketed as digital gold or a store of value and doesn't really do anything else, it sort of has anointed itself as a store of value. A lot of people still struggle with it. But there are many other blockchains that have a very specific, let's say, use cases that are a little bit more tangible. And so, I think for people who are macro oriented, who like invest in gold, like for them, Bitcoin is a little bit more tangible. For people who don't invest in gold, like let's say you're a VC person and you're used to investing in small companies and equities, like you probably own some layer one protocols as a small part of your own portfolio.
We had Chris Ye on. I don't know if you know him. He's the co-author of Blitzscaling and a few other books. He wrote those books with Reid Hoffman, who's obviously a big name.
Okay. Well, I know Reid. I don't know Chris.
And so Chris is a VC, and his comment on crypto when we talked about this was to be skeptical, not dismissive. And I think the underlying point he was trying to make was that any new emerging technology that kind of has like a gold rush feel to it, there's always charlatans, but there's real opportunities. Where do you see the real plays here?
Well, I think you got to get to know the teams behind the protocols. There's obviously the sort of scope, but I think his characterization is exactly right. My personal view is like most of this stuff is, there are a lot of charlatans in this space, and it's unfortunate because when you look at CoinMarketCap and you just go through the list of all of the different projects, the fact that that there's so many like no-name projects that have no adoption whatsoever, and yet have market caps well in excess of $100 million.
All speculation.
Like makes no sense, right? And unfortunately, that let's say financial energy that's locked up in all of these bogus, these bogus projects is taking away let's say commitment and adoption from the projects that actually do make sense, and have like a real engineering community behind them, with real leadership, and growing network effects. So actually, just recently, one of my good friends who runs he does a lot of crypto investing, and he's a former private equity guy. He sent me this chart of, it was like basically tracking the number of engineers developing on all these different platforms,
good signal.
against like the price of, or the value of each of those different protocols. And there were a couple that stood out. So ICP stood out, the Internet Computer. I think Algorand was a pretty interesting one on that list, and a couple others that aren't super well known, but have like a lot of actual activity from the standpoint of engineers, but aren't necessarily mainstream, and actually are far from mainstream.
Is the chart public? So if yes, we'll link to it in the show notes.
I can find it for you. He actually texted it to me. I can send that to you. But perfect. I think it's really interesting.
Awesome. Now you've been known for, let me say it this way, you've actually maintained a pretty low profile, right? I think you probably do that intentionally. I mean, you haven't updated your LinkedIn, and I'm sure it's not in any small part due to kind of the origins of your business career, right?
It's also just my personality. Like I'm not a very showboaty kind of guy.
I like that.
I think it's easier to sort of just go about my day and focus on my day job.
So for those who don't know you by name, you have been in a movie, right? There was The Social Network, I'm sure everyone's seen at this point. You've mentioned the Winklevoss twins already. You were basically on the ConnectU team. It was you and the Winklevoss twins who had started that. So first question for you on this topic. There was an actor who played you. And I've never had this happen to me, so I got to hear the other side of it. A guy named Max Minghella. I had to look him up because I didn't know who played it.
Yeah.
He's now famously in The Handmaid's Tale, which is a pretty big show. How was that? How did he do?
Well, I had no role. I had no input into how the film was produced, written, or anything to that effect, or in the casting. I thought it was peculiar that they chose a half British, half Chinese guy to play me, who they then decided to brownface. So he actually, I think in the film, may have been like more tan than I am in real life. But he also look, I thought the film was really entertaining.
Yeah.
I think his portrayal of me was inaccurate in the sense that it made me seem out to be like this somewhat dark and brooding person. This
not
is
your
just
personality.
It's not really like like I'm pretty easygoing. Yeah. So, but not that doesn't really matter as far as the the narrative or the it doesn't really change the story much. But so that they never met me, so they didn't really know what I was like personally. But I guess I was sort of in the movie this this agitator, a little bit of a whip to get the twins to go like, Sopranos on Zuckerberg, which is, I think, one of the, it was kind of a quote from the movie itself. He's a good dude. I mean, we did meet once. There was one scene where Cameron and Tyler are at Henley at the Royal Regatta. And so they told me that they were going to film a scene there. So we actually flew out there because it was held during Henley. Huh. So they were filming during Henley.
They would be there. Which would have been easy to find.
Yeah. And like the twins had rowed at Henley numerous times before. And it's like, if you're a rower, it's like the event of the year. You want to go. It's just a great sporting event, great party. Tons of people from around the world show up. Lots of fanfare. Very British. There's nothing more British than Henley. It feels more British than even Wimbledon. But anyway, so I met him. I met Armie Hammer. I met Josh, the guy who played Tyler, who was CGI'd as Armie Hammer, and a couple of other folks. And it was fun. I mean, there was, it was clear at the time this is like a once in a lifetime sort of experience to just kind of soak it in and then,
that's an interesting moment. The
actually came up to him and said hello with a really heavy Indian accent to throw him off. And he figured it out.
He figured it out. He wasn't trying to replicate that for the movie.
No.
Got it. That's awesome. Now, I know that your take and kind of the perception of what happened in the movie is well articulated on Wikipedia. We're not going to cover that. For folks who are interested, they can go read. You have your own Wikipedia page. It's on there. And I'm sure you didn't write that, but it's kind of spelled out.
No,
the backstory. Yeah. How accurate is the movie?
I mean, it's pretty accurate. Like, there's a lot of dramatic flair. They do get some things wrong. Like, the scene with for example, Larry Summers. I was actually there in person, but I wasn't there in the movie. There are things like that I think are somewhat immaterial. I think some of the differences culturally between like their side and our side were magnified or amplified. So like, I think somebody seeing the film without ever having met, say, Cameron and Tyler or myself would think, oh, these guys are a bunch of dumb jocks.
Right. Far from it.
Or like Divya's just like, whatever, like this, I don't even know, like this preppy dude who like, they put me in a sweater and a collared shirt in every scene, and I think the reason is that there was one photo of me online taken by some journalist from the Moakler courthouse. It was like after some evidentiary hearing that I had to go to, where I was just happened to be wearing like a blue cashmere sweater with like a collared shirt. And that became like, it was on Google. So then I decided that that was going to be my look throughout the film. Anyway, like, I think some of these cultural differences were a little bit exaggerated and a little silly, but that's, I guess, there for dramatic effect. Look, my personal view is that the truth is always more interesting. But I get for Hollywood why, putting people in a box is more interesting. It creates a little bit more of a clear, this guy versus that guy, good guy versus bad guy, that kind of thing. But obviously in reality, things are a little bit more subtle.
Yeah, I appreciate what they do in movies now, especially with these epic long journeys through multi-season shows becoming so commonplace. It's hard to tell a whole story and do character development in 2 hours.
I've stopped watching movies.
Right.
Ever since we are, speaking of golden ages, we were absolutely in the golden age of television. I mean, between Fantastic. Like Breaking Bad, Game of Thrones, whatever. Now? I mean, whatever.
What are you watching?
Right now, I've basically been just knee deep in like dealing with my toddler and newborn. So I'm sort of stopped watching.
That's tough.
I've been meaning to watch the third season of Succession. That's just a hysterical show for anybody who's like lived in New York and may have met one of these characters. Right. I mean, it's pretty fun. It's like 5 completely psychotic people who also happen to be billionaires, trying to pull strings in New York. I mean, it really, really funny show.
I'm binge watching Narcos season 3 right now. Narcos Mexico. It's awesome.
See, I never even made it through the first season.
Highly recommend. I'm a little bit of a history nerd, so I love learning about what was happening in the background. So let me change the table here a little bit. I met you about a dozen years ago at this point, and when you were introduced to me, you were introduced I don't think this was said to your face, but this is how you were pre-wired, that you were the third guy in the ConnectU team.
Mm-hmm.
And we sat down. I remember you came to my office just for a meet and greet, and you were busy doing your JD MBA at Kellogg, and you were a starving student. And what I took away from this meeting was this fascinating dichotomy of realities, where I remember you feeling a lot of, maybe I misperceived it, but I don't remember exactly what we talked about, but coming away thinking you were very stressed about money because you had your student loans coming up, and you probably hadn't earned an income in a while. And there was very much this feeling of, the normal pressures that I think everyone feels. And I left the meeting and I was like, doesn't this guy have Facebook stock? And aren't they going public? And they, sure enough, they went public a year later. What I saw then, and I have seen many times since, is that a lot of people have trouble internalizing paper wealth until it has been somewhat liquidated. And then their life really changes. And I'm in the venture game, which is famous for people getting rich slowly. That's the phrase VCs use. So I know a lot of VCs who have material ownership of companies that haven't gone public yet, but when they do, they're going to make tens of millions of dollars, life-changing money. How does that psychological narrative resonate with you? Is that the pattern you saw and have seen? Is this a thing?
I was never worried about money per se, only because I never really had aspirations of becoming rich. That was never, my parents were doctors, but we lived in a pretty middle class part of Queens. I grew up in Bayside, Queens, which is close to Long Island, but sort of still in the city. I always aspired to have independence, financial independence, but I never really. Growing up, I kind of imagined that I'd become a doctor, and then I got to college, and then I realized I don't think I'm the right fit for that, and I sort of stumbled on entrepreneurship, and it hit me that entrepreneurship was a field where I could bring together multiple aspects of my personality and skill set to the table, and make that kind of my life, and so that got me excited, along with the impact,
Right.
just the opportunity to do something innovative is I just think a real privilege, because most people have a job, and then some subset of those, which they don't like, some subset of those people have a career, and then a lot of those people also don't like their careers. And then there's a smaller, I think a very small subset of people who have a job that is their passion. And so I think that prospect got me excited at a young age. And I was lucky to have that experience in college, where you have a lot of room to take risk and not have to worry about what happens if you screw up, because there's time. You just have a lot of time at that,
Right.
Relative to when you were 40 or something like that. So, but I think because I grew up in fairly modest surroundings, and was frankly never exposed to wealth. I didn't have friends who went to private schools in New York City or anything like that. I didn't really know what that world was. And then I think when I started school or graduate school, when we may have met, because I was doing this dual degree, I was also under the gun from the standpoint of just academics. And I was trying to balance the desire to start this business SumZero with all the academic obligations I had. So really it was that. I think most people, though, who, let's say, grew up under normal circumstances, don't internalize wealth until far later, because you can't reverse decades of living and whatever your lifestyle is up until that point, just because you gain some degree of paper wealth.
Yeah.
Right. It'd be very unnatural. I've got $10 million in paper wealth. I'm going to go buy myself a G-Wagon tomorrow. And nobody does that, because they know how much it takes to get there. But B, they have years of programming in their brain that no, it's better to be modest and to be, to know that it is paper wealth. It might go away. It might disappear.
Right.
It's not like, it's not a sure thing. So
I have friends who are self-made though, who have gone down that path, looked at their money, have found it more or less probably some degree of meaningless. It doesn't give people what they think it's going to give them, and have bought the fancy cars and all that. But it's funny, it feels like they're twisting their own arm. For a lot of folks, it's not the natural inclination, even if they can. It just feels like they're supposed to.
Yeah, I mean, to me, honestly, it that would feel not only irresponsible, but I would be embarrassed.
Mm-hmm.
It's like you still have to show your face to your family and your friend, and
Right.
like they would look at you and they'd be like, "Who are you?" And I think that's a weird transition. And I don't personally ever want to put myself in a position where I'm like embarrassed to like have people over my house because of some weird, material thing that I've, purchased or whatever. Like, I don't want to be that dude driving a Lamborghini. It's just never been
good instincts.
It's just never been something I've wanted. And there's no amount of wealth that's going to change that. But I do think that like, there's a balance. Like if you're given, if you're fortunate and you have you have that flexibility, oh, now I've got, some degree of wealth, like it's really like you become a capital allocator in a way that maybe you didn't realize when you didn't have that money. And then it's like, okay, what do I do with this wealth? Like, do I start another business? Do I just invest in other entrepreneurs? Do I do both? Do I just pursue certain passions that I maybe didn't have the ability to pursue before? Like, and I think those are all healthy things to do. And it does take time to think through, like, okay, I've sort of made it, at least on paper, what's next? But I think most people who are self-made don't ever want to slow down, at least not as, in their 30s and 40s and, even their 50s. Like they're young enough where they have the energy to want to kind of keep building. And it's just a question of what.
My freshman year in college, we had to take a mandatory English class, a writing class. And the content we happened to study stuck with me. It was Andrew Carnegie, and it was just used as an input for the process of learning how to write. But I happened to read a lot about how he thought capitalism was broken at the end. The system does a very good job of delivering resources to the hands that are capable of using it effectively for society, but doesn't do a very good job of then motivating those people to use it. And that stuck with me. That has become something kind of deeply ingrained in my mindset. The sense that wealth is actually responsibility. It's not just privilege. How does that line up with what you do next? Where do you go from here? You've been at SumZero 14 years. I know you're still building on it layer by layer. Even the stats you shared on this, you got to update your LinkedIn site, by the way. 16,000 members there, 20 on the pod. What's the future hold for you?
Well, putting aside my personal life, which I think for me, like just building my family, like that's very important to me, and I want to make sure that I do a good job in that department for my kids. But professionally, honestly, I'd like to teach more, or at some point, I'd like to kind of, impart, at least whatever wisdom I've picked up to kind of that next generation. I think it's fun, and it's one of the more rewarding things I've done in the past. I think practically speaking, I'll probably be doing less over time, day-to-day operating, and more outright investing. I think that's sort of a natural evolution that a lot of entrepreneurs kind of experience, where, the first couple decades of entrepreneurship, it's a slog.
Yeah.
It's a lot of phone calls. It's a lot of, you're just like selling all the time, right? And just fire drills, dealing with hiring like on a very direct day-to-day basis. And I think if you're good at that, and you're lucky enough to have an exit or two or what, if you can kind of make that work, I think doing more just direct investing is a more efficient way to like leverage whatever platform it is you've built. So I suspect I'll be doing more of that. And I think the advisory stuff, like the stuff I'm doing at Gemini, is great. And hopefully that's something I can do more of as well. Maybe just kind of take on more kind of board roles, get a little bit more diverse industry exposure.
Divya, thank you for being on. It's awesome to have you.
Really had fun chatting, Mark. Thanks for having me join.
All right. Awesome to have Divya on. I love his stories. Hey, thank you for listening to this. This is where I ask you to help out. So if you're interested, please click buttons, share, like, 5 stars, whatever. If you could share with friends, that's also super cool. Appreciate that. You can find me on Twitter @MPD. And to hear more of my conversations with innovators, you can subscribe on YouTube, Facebook, or any of the major podcast platforms. Just search for Innovation with Mark Peter Davis.